Welcome back to episode 14 of the ICT Mastery Mentorship. In this episode, we're going over order blocks. You've probably heard the word order blocks everywhere. You've probably seen it in your random trading videos, and you've probably been all over YouTube and heard that word everywhere. Okay. Now, order blocks, yeah, I will say they're pretty useful, and I'll personally say a very passive and very what's the word? But it's a very good PD rate to use. Me personally, I use the order block concept a lot. But in this video, I'm going to be teaching you the two types of order blocks, what they can be used for, and how you can use them within a trade in hindsight. Because I do not have replay mode, I don't need it, but whatever. We're going to start. So there's two types of order blocks. Okay, you have the consecutive order block, and then you have the singular order block. I made those names up myself. That's not actually the official name. The official name is order block, but there's two variants to it. There's two types of order blocks, okay? So the consecutive order block, the verbal definition for it is 2 or more consecutive candles before prices places. Okay, now let me show you an example of that. Let's go straight over here. Right here. NAS, right now, NASDAQ 100, is currently returning to this order block here. Right along here. This is your order block. So let's zoom in on this, and I'm going to explain why this is a consecutive order block. Okay, this is a consecutive order block because in the verbal definition, as I said, 2 or more consecutive candles before prices places. Okay, one thing, do we have this placement after these 2 consecutive candles? Yep. So this makes this an order block. What makes it a consecutive order block? What I mean by consecutive, you see how this candle comes in, then this breaks it? Yep, that's what I mean. If this candle didn't break it, right? This second candle right didn't break that candle's low, this would not be an order block. That right there would not be your order block, okay? So for example, if we had a bunch of candles breaking low, so if it just kept breaking lower, right? If we had one candle, another candle, another candle, another candle, another candle, and it keeps consecutively breaking the lows, the order block's gonna naturally get larger. Okay, it's going to happen. Period. So first candle, first down close candle. Then we see the second candle comes in, breaks the low of the previous candle, and then closes as a down close candle. Then what we have price do is we have price displace higher. Okay, so the first step is to see what type of order block it is. You haven't learned another type. But for consecutive, we're staying strictly on consecutive right now. To see if a consecutive order block has officially formed, you want to see 2 or more consecutive candles. Okay, 2 or more consecutive candles. Okay, and I'll go over this real quick. A bullish order block are bearish candles or down close candles, and a bearish order block is up close candles or bullish candles. Okay, I'll say that again. A bullish order block is down close candles, and a bearish order block are up close candles or bullish candles. Very simple, okay? Why is this bullish? Because down close candles, okay? I'll go over this one more time. A consecutive bullish order block consists of 2 or more consecutive down close candles before prices places. This place? Yep. Is it consecutive? Yes. Why? Because you have one down close candle, another down close candle. Is it consecutive? Yes, because it breaks the low. And then it stops. Okay? And then it stops right there. So this entire zone here, if I can even grab the rectangle tool, this entire zone here would be your order block. Right there. I don't know why it's red, but it doesn't matter. But that is your order block there. And if you see, price is already coming to this level and respecting it. It's coming out of it right this moment, actually. But yeah, that is the consecutive order block right here. That's just the first variant, okay? You don't even have to call it first variant. That's the consecutive order block. Now the singular order block, okay? The singular order block, I had an example over here somewhere. Oh yeah, right here. So right along here, okay? Let's literally look at this. The reason I taught you consecutive first is because you have to know that one first in order to determine if a singular has formed. Now, let's pay attention here. Let's pay attention. Just pay attention here. See these consecutive down close candles? There's 3 of them. Okay? See that? There's 3 of them. But there's another down close candle. Is it consecutive? Did it break the previous candle's low? Nope. So this is where the consecutiveness ends. Right here. This is where it ends. Then we have this next down close candle. Does it break the previous candle's low? Yes. But what does it also do? It breaks the previous candle's high. That's not what it's supposed to do. If it's a bullish order block, it should be not breaking the previous candle's high on a consecutive order block, obviously. But for a singular order block, it can do that. Okay, because a singular order block is one candle. Okay, it's literally one candle. And the verbal definition for a singular order block is the last candle, right? The last singular candle that digs deepest into price before price is places is your order block. Okay, so let's go over that. Okay, we have the consecutive order block that was forming. This candle right here stopped the consecutiveness. Then this candle came in and also ended the consecutiveness again by breaking this candle's high. Okay, because like I said, with consecutive order blocks, it shouldn't break the high, period. Because if you look here, high is not broken, high is not broken, high is not broken. Lows are broken though. Low is broken, low is broken, low is broken. And it's the opposite for a bearish order block, which is up close candles. So on this final candle here, this is your order block. Now why? I said dig the deepest, okay? The singular candle that digs the deepest in price. Alright? So do you see the body of this? Let's do this real quick. Okay, let's do this candle's body and this candle's body. Which line is lower? Like obviously, which line is lower? This one. This one. Okay. So whichever candle that ends the consecutiveness digs deepest into price, body-wise or institutionally, that's your order block. Okay, that entire candle is your order block. And if it continues, you know, being consecutive by going lower like this and going lower like this, then that's just a consecutive order block. But did it do that? Nope, it didn't do that. So this right here, this little zone right there, partner, is your order block. Let's change this to a different color, probably yellow. Oh no, that looks nasty. I'm sorry. I was gonna just let it sit there, but I can't. Oh no, that looks terrible too. I'm so sorry. Okay, that looks a little better. But it comes into the order block and it says bang. Okay. Now order blocks. Okay, I just taught you both order blocks. Okay. We're gonna go over this a couple more times, but order blocks are institutional reference points. What do I mean by that? Order blocks are points that price is supposed to respect, okay? Or in other terms, they're PD arrays, okay? PD arrays are what you use for entries, confluences, or simply where price is just supposed to respect or is supposed to, you know, bounce off of, okay? Institutional reference points, in short, okay? And an order block is a form of that. It is supposed to bounce off this order block, okay? And obviously, it can run through an order block. It can. Price can do that. But in the future, you will understand why price runs through the order block. You understand the narrative, the bias, the context, the reasoning, and the lore behind, you know, why price runs through an order block and why price does certain things. But enough said, an order block is supposed to get respected, okay? Now we're going to go over, you know, a trade example of this. So using this same singular order block here, right? Let's add some other things. Okay, what do you know? You know about liquidity purges, liquidity runs, fair value gaps, liquidity in itself. You know about actually, what do you know? You know about the kill zones too. Actually, hold on. Let's just. Okay, so you know about all of this until here. Okay, that's all you know. So what I have to do is I have to, you know, replicate my brain or my mouth into your brain. Basically, like, okay, they know this, so you know, there's that. So if we look here, right, price comes into this low, bang, purges it. Into this low, bang, purges it. So that's two liquidity purges, okay? 2 liquidity purges, okay? And you see how price comes below this low and pulls all the way back up? Yep, very cool. Very cool. So that's showing that price wants to go higher, because if it wanted to push through it, it would push through it, right? It's just common sense. It doesn't need to do anything absolutely stupid to show that it wants to push through it. If it wants to push through it, it would do it, right? Like how they say in relationships or whatever. If he wanted to, he would. If she wanted to, she would. You know, all that. But literally same thing with price. If it wanted to, it would. Very, very simple. If it wanted to displace away from it or get away from this low, it would do it. And did it do it? I think so. I personally, what do you guys think? I think it, bounced off of this low. I think it just purged liquidity and said, let's go high. Well, what do you guys think? I think so. I personally think so. But with all seriousness, these 2 points of liquidity got purged, okay? Then we saw price hold itself all the way back up away from this low, showing that it wants to go higher, okay? Now, we draw our equilibrium ranges or our dealing ranges from here to here. Uh-oh, I just gave you guys a teaser. I just leaked something. Oh my god, new strategy? Oh no. But with all seriousness, this is it. So, two confluences actually, is that we are in a discount. We purged 2 points of liquidity within a discount, and then we are pulling higher, okay? So we want to, like I said, buy in a discount and sell in a premium, okay? So this is already a buy opportunity coming. So we wait. We wait and see what's going to happen. Price purges liquidity, then displaces up. That displacement is a confluence showing that price wants to go higher. We notice that order block is right there, right along there. When price comes into the order block, that is your entry. So I guess you could say, I don't know, right about there. We just slide it over. And there's your entry right there. You could say your stop loss at the bottom of the order block. And then your target right where. You can either set it there at that short-term high, or that, well, no, not short-term, but just high, or this high here. Did it hit it? Yep, it did. And also, I'm recording in a hotel lobby, so if you hear other people in the background, or my Wi-Fi just cooked, you know why. But anyways, content is content, information is information, and teaching is teaching. But on a real note, it was a good trade. 3 risk to reward off of an order block. Obviously, this is on a daily. I'm not teaching you to trade on a daily, but you can still replicate higher time frame concepts on the 3 minute, the 1 minute, the 15 minute. Literally, it's what's the word? Fractal, I think. It's fractal. It does it on everything. Okay. It's not just gonna do it on one time frame. It does it on everything. Even stuff like this. It does it on bonds. It does it on stocks. It does it on futures. It does it on forex. It does it on crypto. It does it on indices. It does it on options. It works on everything. Okay. What I'm teaching you works on everything. Okay. So just remember that here on out. Whatever you want to trade, you can trade. But me personally, I do forex, indices, gold, and that's it. Or euro, NAS, and gold. And that's it. Very simple. Nothing hard, is it? I'm a little sick right now, too, so if you can barely hear me, then you know why. But that would be your setup if you use that order block as an entry and, the external confluences to confirm that price is going to respect the order block. But, before I end the video, let's go over the order block a couple more times. In this example, we have a single order block, because if we look here, we have a bunch of consecutive candles. Consecutive. This candle ends the consecutiveness. How? Because it's a down close candle. That ends the consecutiveness right there. Then we have this second up close candle, right? And then this happens here. Bang. See that? So, see that right there? If we do this candle right here and this candle right here, which line is higher? Okay, well, which line digs the highest into the market, or digs deepest into the market before displacing? Is this line, okay? So, if it's this line, right, that means this candle, this entire candle here, is your order block. Price comes down, and then comes back up. And boom, there's your entry right there. And then you sell off. You sell off into that order block, or you can sell off into that fair value gap, okay? If you want to, take a trade off of this, you have a liquidity purge here. Bang, right there. So we mark that as liquidity purge. I'm so glad I revamped my tools, dude. It looks so sexy. Oh my god. But with all seriousness, it came into a premium of this dealing range here, came into a premium. It purged liquidity in a premium, and it showed that it wanted to come lower because look at this. See that? Came into it and said, whoop, came right back down. And then created an order block too. Came into the order block, that would have been your entry. You can set our, our entry right there. We set it on the top of the order block. Right there. And then you drag it to a fair value gap. You can use fair value gaps as targets now, because like I said, price is always targeting or rebalancing fair value gaps. Okay, that's one of the 3 rules. It's always going to be doing that. So you can use that as a target. You can use this fair value gap, that fair value gap. Well, not really that one, because that one got filled right here. But you can use this fair value gap or that fair value gap if you're eager. What's the word? Ambitious enough to go there. And that would have gave you a 5 times your risk. Very simple, not hard at all. So let's go over if we can find one, a consecutive order block. If we can find one, obviously. Alright, so right here we have a consecutive order block. 1, 2, 3, 4. This ends in consecutiveness, and this successfully creates a consecutive order block because it stays consecutive and they're all up close candles. So this is officially an order block. But what price must do first is it must come down outside of the order block's range and then come back up into it. You didn't know that, did you? Yeah, we must do that. And if we look real closely, it was very tiny, but did it come out of it? Let's see. It was very, very tiny. Did it come out of it? Yep, it did. The order block starts right here. It came right out of it. Look at that. Pulled it right back up into it and then tanked. So this entire range here from those consecutive candles is your order block. Right there. Price comes into it. Bang. Dumps. Crazy. It's amazing. Truly amazing. With all seriousness, that's going to be your stop. Your target can be this low here, which the tool already has it adjusted at. Or your target can be here at this fair value gap, because it's right below this low. Or it can just simply be this low here. Did it hit it? Yep. Beautiful. Look at that. Beautiful. See that? Very, very cool. You're probably like, oh, this is hindsight, this is hindsight, this is hindsight. Dude, I don't even have replay mode, bro. Yeah, of course it's in hindsight. I don't have replay mode, but with all seriousness, this works everywhere. It works in hindsight. What in the world did I just... Oh, it's F12. Wow, I just pulled up Google Docs by accident. I might cut that out, but I probably won't, because this is raw footage. But with all seriousness, I don't know what happened at the end, but I'm going to end this video here, or in this episode here, not video, because if it was video, it would be part of the compendium, but this is a part of the ICT Mastery Mentorship. But with all seriousness, I'm going to be ending this episode here. I'll see y'all in the next one. Peace.